Hi everyone, welcome back to Be Rich. I hope you're doing well. I'm still in Singapore, so I'm recording remotely. So do keep that in mind if the audio quality and the video quality isn't the usual. Yesterday I had spoken about Target and before that Walmart. Today I thought I'd talk about something that all investors, including Indian and non-Indian, should be worried about and keep an eye on. There is something happening in the bond market, especially over yesterday evening. Those of you who are in India must have been sleeping. For the rest of the world, when you were awake, this must have been unfolding. What is happening in the US and Japan? Is it bigger than Greece? Is this a debt crisis no one is talking about? Is something which is what I'll try and answer by the end of the video. Then you can give me your opinion. There's been a quiet shift in the Japanese bond market, which is rattling the Wall Street, because what's happening is the entire global economy is slowly shifting, and no one is talking about this yet. What is happening is the Japanese 40-year bond yield is crept up to 3.7. Why is that important? Because one of the biggest consumers of global debt, especially the American debt, is the Japanese domestic investor. And the Japanese domestic investor is slowly seeing they feel it's better and safer to be in Japanese bond thanks to the inflation in Japan and the rising Japanese bond rate by the Bank of Japan. They seem to feel, why should we be aggressively buying government debt to American debt? We might as well look at our own Japanese yen and hold on to domestic debt. This is a contagion, and the contagion can turn contagious and spread, and this can create a global bond sell-off. This is what a lot of people are speculating. Is it going to happen? Hopefully by the end of this video, we'll come to a consensus on what we can do if this happens, and what are the signs we should keep in mind if we think this is going to unfold. I don't want to be a harbinger of doom, but this is something of great concern if you are in global equities and if you're in global bonds and if you're dealing in currencies. So what's happened is we have Japanese insurance companies and Japanese pensions and Japanese institutions. They used to be one of the largest buyers of US treasuries because, historically speaking, when the Japanese equity market cratered in the 80s and there's a complete collapse and the Japanese took their interest rate to zero, Japanese institutional investors had no other option but to keenly look at US treasuries as a way to invest. There's even a famous story that how the Japanese women are the ones who are propping up the American economy, because they would collect all their savings and they realized their savings being in dollars is better. So they will sell the Japanese yen, buy American dollars, and this is one of the ways, very crudely you can say, was the way the Japanese were propping up the American debt. This was all great because there was a huge arbitrage between the yen and the dollar, the interest rates especially between the yen and the dollar. That means you can borrow in the yen for zero and take it to the US and get easily a lot more. So this arbitrage was there, but that has all changed since first last year. The Japanese economy is slowly coming to a recovery after a 40-year break, and you saw the interest rates starting to rise. Then we saw what Trump was doing in terms of global trade and currencies in the beginning of this year. This has led to a lot of Japanese people and Japanese institutions who are extremely risk averse and who are extremely conservative in their outlook after what has especially happened to them during the 80s and waiting 40 years to get out of this mess they got themselves into. They are now starting to prefer holding securities and their bonds instead of US and US dollars. They're more keen on holding yen in their own domestic currency. Why is that? Because the risk is much lower and it is in no way exposing themselves to currency risk against the dollar. So this is why the perfect storm is coming. Why is the perfect storm coming? Because the American president, in his wisdom, has leaned on the House Republicans and yesterday pushed through their budget. And the problem is there is a reducing demand for US debt at this time when US borrowing is exploding. The Americans want to borrow more to finance these ideas of theirs, right or wrong. I'm not going to judge that, but there are very few people who are willing to finance their dreams now. And what does that mean? That means it's pushing the American yield. The American bond yields are going higher. For those of you who don't understand this, who are not experts in this like me, it's very simply put. Let's say you have a $100 bond and you're getting 5% interest, right? And now in the market, the Japanese are saying, I don't want to hold on to this anymore. They take this $100 bond and they're saying, you give me $90, I'll sell you this 5% bond to you. That means the person who's buying the bond at this discount of $10 is not only getting the yield of 5%, they're also getting an additional $10 savings. So that means net, the interest rate, let's say, is 5.5. So for those of you who don't understand, that is how the interest yield for a bond goes up. Though it's an old bond, you're wondering, these things are fixed. How come suddenly you're saying the bond, especially second-hand bond, interest rates are going up? If they're just being traded. This is how the interest rates goes up, because people are willing to, the Japanese investors are willing to discount the American securities and sell it back into the secondary market at a lower price. In turn, the overall net yield for these bonds are going up. So what is this doing? This means whatever new bonds which are going to be issued by the American government have to match the existing rates which are there in the market. That makes borrowing for the Americans more and more expensive, because this is known as a domino effect. So the new bonds which have to be issued by the Americans for the new money they want to borrow, these have to be at a higher yield. So if they're at a higher yield, what does that mean? That means higher interest rates. Higher interest rates means home loans, mortgages goes up. Loans, all kinds of business loans and personal loans goes up. Credit card, Americans love using credit card, and credit card rates, those start going up. So this is a vicious cycle. This is a contagion which I was talking about. It has not become fully outblown contagious and hasn't created a seismic quake, but it has the recipes for this, is what I'm trying to say. So let's look at the bigger picture here. What is the bigger picture? Bond prices are falling globally. Stock markets are reacting irrationally in exuberance. You see stock markets are rallying. And the Japanese, American governments, can they keep borrowing forever without any consequences, is the big question here. Why is this a big question? Well, the whole thing hinges on confidence. You and me, all of us are having some sense of confidence that whatever we're doing, that we know what we're doing, and that whatever investments we're making, that we're thinking we're going to get a certain return. That is confidence that we have, that we feel that we know. But if that confidence breaks globally, we will be back in the situation that we were in 2008, which was a financial crisis. For those of you who are younger, who are in Gen Z, I would suggest that you read a bit of history and see what happened in 2007, 2008 to understand. And why did I say in the beginning of the video, this is bigger than Greece? The Greece crisis was about one small country in the Eurozone and the effects it had on the Eurozone and how it could spread. Here we're not talking about one small country. We're talking about the third largest economy in the world, that is the Japanese economy. And in terms of bond market, they're only second in size to the American bond market. So they're second largest bond market. So if you look at this, this is not a local thing. This is very much a global thing. That is what is happening here. So what should we do as investors? There are a few things we can do. This is not a situation where we have not seen before. So these are the kind of ideas you should keep in mind. Like even Jim Rogers, who's sitting here in Singapore, had come out recently saying that he sees too much craziness in the market and he has sold all his equity positions and he's holding on to cash. Warren Buffett has also famously last year itself sold and he's holding on to cash. So keeping cash reserves is not a bad thing. Having cash in hand is not a bad thing. You should not take everything which you have in the bank and go throw it in the market. Stay diversified. Pay attention more to risk than yield in bonds. If you're looking at a bond, look at the risk in that bond more than the yield, and watch currencies, especially what is happening between the yen and dollar, and that should give you pretty much a bellwether of what's going to come. Especially if you're investing in bonds, don't hold on to bonds which is extremely long duration. Try to keep these duration short And of course, as always, it's a very prudent time to do like what Charlie Munger used to say, our late Charlie Munger, time for value-based investing. See value and invest in value, and don't get carried away with the exuberance in the market and the rallies which you see in the market. This is where we're standing in terms of all the news that was happening yesterday with Trump pushing through this budget deal, right? The big budget deal, which he has promised is going to solve a lot of American problems. Of course, there is still a lot of work to be done for the Americans. It's not done and dusted. The Senate has to approve this too. Then it happens. A lot of Republicans who are keen watchers of the bond market, who are influenced by bond markets, are getting scared of this. What's happening, the rattling in the Wall Street and the bond market, and the far-reaching implications of this deal which Trump is talking about. So this is what happened last night for those of you, or yesterday I would say, for those of you who are in a different time zone. For those of you in India, this is what happened while you were sleeping, which I thought will be of great interest to you, if especially you're looking at global equities and global markets and global currencies. If you're within India and you're staying in Indian equities, it's a different story. But there are implications to that too. Of course, what happens to the globe, especially the Japanese and American markets, will affect us in all shapes and forms. But if you're investing globally, do keep an eye on all the things I've said. Thanks for watching Be Rich today. I hope you found this video informative and entertaining as always. And I hope you had a wonderful day and a wonderful evening. I'll see you again tomorrow with another stock news. Good night.